Well, good morning and welcome to our Friday morning market briefing presented by Mr. Sam Seiden of the Online Trading Academy, OTA. I'm Don Prattle, the Director of Trader Development and Education here at TradeStation. This morning, the big number that we're waiting, or the big news waited for this morning, was the Consumer Price Index. That announcement was that the consumer prices rose 0.1% in July and 1.7% more than a year ago, with a matching rise in the core consumer price index, including or excluding food and energy. That report just came out a few minutes ago. Some of the other things on the docket today is JCPenney's releases its second quarter earnings. Markets in Japan are closed for a holiday they call Mountain Day. And actually, it's a short list of items that we're going to pay attention to today. Now, finding profitable trading opportunities can be tough no matter what the market's doing, but you don't have to do all the work yourself. Today, we're going to hear from Sam Seiden, who can help us with some analysis today. Our presentation is for educational purposes only. All the symbols and all the trading ideas that we discuss here are for demonstration purposes. They're not recommendations, and our presentation is not an offer or a solicitation of any kind any place where a TradeStation affiliate's not authorized to do business. Active trading is not suitable for everyone, so please remember too that options trading carries a high degree of risk and may not be suitable for all traders. I've posted in the chat panel some disclosure information about the risks and characteristics of various asset classes. Please click on those and take a look at them at your leisure. Also, in the chat panel, there is a link to the YouTube archive, the TradeStation archive page for the recordings of all of our events. As Vice President of Education at Online Trading Academy, Sam Seiden brings over 15 years of experience in equities, forex options, and futures trading. Sam's been involved in the markets since the 90s, both on and off the floor of the Chicago Mercantile Exchange, and he's been the director of technical research for two trading firms. He regularly contributes articles to industry publications. We want to turn things over in our morning market briefing to Sam Seiden right away. So Sam, please take it away.
Okay, you should be able to see the screen. Is this everything working now? You should see the screen, and you should sound should be fine. Okay, sorry about that. I must have clicked the wrong thing in the beginning. Let's get started. So first of all, we usually cover the NASDAQ first. Why don't we start with the S&P? We do that. The chart that we really need to come down to. First of all, I heard so many people talking about the S&P and the NASDAQ and the big drop in the markets yesterday. But when you look at the weekly chart, the daily chart, it's like it's not much of a drop at all, right? Could it turn into more? It could. Our big key levels are much, much lower, but there's plenty of little demand levels along the way that we should see nice tradable bounces from. And for that, we need to start with a smaller time frame. Let's not have to go too small too fast. So here we're looking at a 30-minute chart, 60-minute chart, doesn't matter what you look at, but when you, let's see, the low this morning, 24.30 and a quarter. If we go over here, just barely didn't even touch it, missed by about half a point. But you have a demand zone here that price came down and turned just before it. So that's a pretty big clue that there's some decent sized demand there. Does that make sense? If there wasn't, what happened here wouldn't have happened. Price is moving higher because there's nothing here to the left to stop it until we get up to this area, probably about 24.47, 48, this area in here. And of course, the very key shorting areas are when you get closer to the rally-based drops. So these levels up in here, but they're pretty far from current price. don't want to spend too much time on this time frame. Most importantly, I want you to be aware throughout the day that this level is sitting down here. So even if we make a new low, what will happen? This is a 30-minute chart. If we make a new low, a lot of people are going to get very bearish, correct? New low on the day. But when you make a new low on the day that sets up, very bearish expectations, um, you know, into a demand zone, okay, then that sets up for a nice bear trap. Make sense? Okay. All right, let's move on to a smaller time frame, and let's actually go pretty small here. Here's the 5-minute chart. Now you can start to see why price is getting hung up here. You have a little bit of supply here, not a lot, just a little. And you do have a tradable demand zone sitting just below it. I'll go down to a 2-minute chart so you can see that better. Okay. Once we hit supply, if we come back down to demand or come back down to the 24.34 area, you should see a nice tradable bounce back to the upside. Keep in mind that level goes all the way down to 24.32.5. You need to stop below this. Okay, so those are the two little areas to pay attention to. All right. On the upside, again, we're slowly working our way through this, but as you get a little bit higher, once we get up to, well, it's the same thing. Nothing's changed. That 48 area is probably the next key stopping point. What's great about today? Very tradable, levels all over the place. That's the S&P. Let's go over to the NASDAQ. I actually haven't even looked at the NASDAQ today. However, I've taken pretty much the same trade every day for the past 3 days in the NASDAQ, and that's a short with a big profit zone below. No reason why we can't do that again today. I'm not even sure where this line comes from. It's this. Okay. Yeah, this is a great area right here. That would score out very high with our odds enhancers. Obviously, price came into there. That's why you're seeing this turn higher. Here's that same level in as you saw in the S&P. This is 58.26. And real quick on a smaller time frame, you're probably going to run into trouble a little bit quicker here, actually. This 58.08, I'd be surprised if price went right through that. So you possibly have a tradable bounce to the downside from, right around the 08 area. And then that would possibly take you down to, let's see. You're going to have something here if you get up to 08. And then here's those same levels as you have in the S&P. But I would take the S&P over this down here. Again, just stick to the patterns. Remember, if you're struggling at all with your trading or anything like that, anything related to that, it's the main reason is because you're not focused on the right thing. 100% of your focus, in my mind, needs to be on pure supply and demand. Where are the buy orders? Where are the sell orders? If you add anything else into that decision-making process that doesn't have to do with supply and demand, it's just going to confuse things, typically add risk, and decrease reward. I have plenty of other markets on my list here, but if there's a market you want me to go to, I'm happy to do that as well. Another market of a lot of interest is oil. I think let's skip oil because it's not really moving. There's a real nice level here on a a smaller time frame, but we're so far from that. Let's just move on. There's plenty of other markets that have stuff that's a lot closer. Let me just see what's on your list. Oops. Yeah, the S&P. We spent all our time on the S&P in the beginning. A lot of really good levels there. Okay, yeah. Let's look at the dollar. So the dollar, as you know, here's that daily chart that we've been going over for years. These levels just don't change. So we still haven't gotten down to that 92. But you can see today, the first, we came up. We actually got down to 92.50, believe it or not. Came up, hit this level, and now we're back down. So I know the dollar had a huge move up, but don't think the dollar can't go lower. There's really not a whole lot to stop it from going to 92. And longer term, the plan is for the dollar to come up to these supply levels and then move down to this this area down here. But we'll see. Oh, when you come down to a smaller time frame in the dollar, you're also going to see there's not a whole lot. I mean, I'm on a 60-minute chart. There's some supply higher. There's not a whole lot of demand below. I wanted to show you that too on a smaller time frame. Because if you're trading really anything, you don't need the energy metal markets, equity index markets, currency markets against the dollar. They're all related. So you want to know where those things are going. Yeah, let's take a look at the euro. In the euro, we have a nice trade going that we found here in one of our TradeStation morning market briefs. Getting a nice big rally today in the euro so far, but don't forget, here's our morning market brief area off the daily. We're quite a ways off this level now. Okay, and we do have demand here, so we have to get through that. But we've looks like prices eaten up quite a bit of the buy orders here. Still some left. If we come down to smaller time frames, I hope we didn't hit this yet. We did. Well, if you're looking at the euro, hopefully you saw this level. If you come to these morning market briefs, they don't get much clearer than this. But I think the good news is you barely touched it. May or may not have gotten an entry even if you found this level. Which means a new high into this level is similar to a new low into that S&P demand, meaning in this case for the euro, setting up for a nice bull trap. Okay, you make a new high, everybody sees that, alerts go off, people think the market's going higher, only for them to fall. So just, I don't think we need to go over prices. It's just a new high, new morning high. Make sense? And you do have room for prices to come quite a ways down. Quite a ways down. One little quick lesson here, though. Notice how prices just blow right through this? It's because this is not supply. This stuff right here would never, ever qualify for supply. We wouldn't even attempt to use our odds enhancer scoring system for that. It wouldn't, right? It's not even anything close. Okay, let's keep going. Yeah, the Aussie dollar as well hit our downside target here. Okay, here we go. So what do we do with the Aussie going forward? Not a whole lot to look at on this weekly chart. That's going to take weeks to play out. So let's go right down to the smaller time frames. Very similar to the euro, this rally into this rally-based drop supply fills plenty of orders there, but the level sitting above it and the level sitting above that are still fresh. So there's a very good chance you're going to get quite a bit of movement today in the markets. Having said that, I just remembered it's a Friday. It would be very different if we were holding these sessions on Mondays. But I guess Friday for us is Monday, right? A lot of these trades set up for the next week. Okay. Yeah, this would be a whole lot easier if these were on Mondays. But that's okay. Somebody's got to be here on Friday. I'm happy to do it. Yeah, there's a huge difference between support and resistance and supply and demand. There's 3 or 4 big differences. There's a reason why you don't see people making a consistent living with, the support resistance, stuff. There's big problems with that. The one thing it doesn't take into account is the buy and sell orders, right? But we can go over some of those differences, during one of our next sessions. All right. So this level comes in around 79.18. It looks really strong, so I would suggest getting in before that level, and then adjusting your position size so that you're not risking more than you're willing to lose. And again, here the profit zone for this looks really good. We have our opposing demand zone here, so we would put our target just before that. And I'd want to come down to a 5-minute chart and take a look. Let's do that. So here's our opposing demand zone. Normally, I have a very rule-based way of doing this. It's measuring the distance from supply to demand and taking 80% of that as my profit target. 100% rule-based, but in the interest of time, we'll just eyeball it and say that's 80%. The most important thing is that you have your target before the opposing demand zone. Remember, at demand, there's competition to buy. You don't want to buy when there's competition to buy. You want to buy when there's competition to sell when you're taking your profit. Yeah, there is a lot of, or I see your TJ, your post down there. There's a lot of order flow tracking software. But if you look at all of it, they're all different versions of the same thing, and they all have the same 2 big flaws. I can go over one of them quickly here. But these sessions are recorded, so we don't want to go over all of it. Again, we don't want to. You don't want that order. Put it this way: you don't want that order flow tracking software to stop. If anything, let's get more of it out there. If you know what I mean, as a trader. There's so many of them. When you look at the what's it called? One of the first kind of theories and schools of thought on all that is market profile, right? Now what a lot of people have done is combined order flow software with market profile and everything. But what's the big flaw? In other words, why did they sell the software versus using it to trade themselves? Because I'll give you one of the reasons. When it comes to the market profile and order flow school of thought, where does everybody look? Right. What's the focal point? Anybody know the answer to that? And while we're doing that, we'll look at the yen too here. What's the focal point for turning points? Yeah, a lot of it's based on volume, but the volume has already happened. That's why we don't focus on volume here. I have no interest in volume in the past, right? But what's the other big problem? Where's the focus? Yeah, the high volume areas. Okay, equilibrium. Is there any trading opportunity at equilibrium or the high volume areas? No, but that's where all the software has you focus. Okay, point of control and all that. They're all focused on the middle because that's where all the volume is. No one's asking the simple question: why isn't there any volume over here? And why isn't there any volume over here? What's preventing that? What prevents volume? Someone answer that question. What prevents volume? Let's see here. I want to go down to a smaller time frame here. Right. No, not equilibrium. Equilibrium, that's where all the volume is. You can trade as much as you want. No, Steve, it's the opposite of that. So I want to make sure we correct this. What prevents volume is what eliminates volume is a supply-demand imbalance so big that you have a lot of one side and absolutely zero of the other side. Right, Terry, no trades. That's the correct answer, but why don't you get any trades? Because you have one side of the market and you don't have the other. In fact, the other side is zero. That's why you get no trades. Now let's take that next step. What about just getting a little volume? The reason why you get a little volume at some price points is because you have a lot of one side and just a little of the other side. Now if we fast forward, where you get a lot of volume is when you have a lot of demand and a lot of supply. But do you want to trade there? See what I'm saying? All this volume and order flow, software has you focus on the middle. And that's why everybody sells it. Okay. In the end, we do have a short-term trading opportunity here, it looks like, but we want to definitely look at a couple more time frames to make sure. I'm glad I did that. This level jumped out at me here and still looks good. The only challenge is we have a couple demand zones below, right here. So if you're, if you're looking to just in and out really quick, I don't want to call it scalping, but just very short-term trading, you do have a profit zone right in here. You can probably take the yen from here to here, or probably take the yen from here to here, or possibly both, if that's what you're looking for. This opportunity probably offers, I don't know, 2 to 1 maybe. It's not something I'm interested in, but if the profit zone was, probably greater than 5 to 1, I'd be all over it. But if you're looking for just a short-term trade in the yen, both sides here are low risk. And if what I was talking about a minute ago confused anybody, you can certainly send me an email. We can go over it a little bit deeper. Okay, for those that came late to the session, and we're going to run out of time here in a few minutes because the market's opening. But just real quick, make sure you understand. We'll just review the S&P real quick again, and this is kind of watch this for any equity index trading you're doing today. A new low, which is very likely today at some point in the markets, not guaranteed but likely, is would put you right into this demand zone. So low risk for a move back up to the 48-ish area. When we came down to the smaller time frames, we did find other pockets of demand. This one starting at 34. Okay, for a nice tradable bounce to the upside, you have two demand zones sitting on top of each other. And then, of course, now that price is finally through this area. Remember, this is kind of a big cluster of just stuff up there, but we're through it. The next target could very easily be 48. Okay, let me quickly go to, let's see if we had anything in gold. I thought, no, we didn't have anything in gold. Or was it this? Let me just see what's over here. Oh yeah, we had these two levels, and it looks like price came into them already today. It looks like they're both used up. Yep. All right. Well, they both held, but they're done. What do we do going forward? You need to look for a level above this, and I think there is one. Let's take a quick peek over there. Not that. Here it is. So this is a great one here to end on. It says 1318.5, but let's bring it down to 1318. Any good levels, typically your biggest risk is just not getting filled. Okay, so 1318 to 27. Keep in mind that's 9 points of risk in a $100 a point market, so just be aware of that. We're on a 60-minute chart here, so this is not a little day trade. This level is certainly within striking distance, and when we come over to the right, if nothing changes and the market goes up to that level from where it's at now, your profit zone would be to, just before this. Which isn't great, but it's not bad. If price comes down, halfway into this level and then goes up, now your profit zone is bigger for that gold short. Okay. There's my email address, sseiden@tradingacademy.com. If you have any questions, happy to help if I can. I'm pretty caught up with email. So, yep, some great opportunities. I think we found a number of them. So just stick to your rules, stick to your plan. Never risk more money than you're comfortable risking, because that won't work out. And equally, make sure you hold to your targets. You know, I've been preaching this nonstop, but that's the issue I find with most people today. They don't hold to their targets. That's just as bad as not taking your stops. Uh, before I turn it back over to Don, new little level here in the S&P at 40, call it 41, for a possible move down to our 34 that we've been talking about. So that's the new profit zone. If we get a little bounce back up to 41. All right, everyone. Have a great weekend.